Hello, this is Brian Resney, President of Resney Wealth Management. I'm here to bring an important update about the economy and the investment market so you can better understand not only the global landscape, but also how we're currently positioned. You know, I watched the second presidential debate last night and listened to a lot of the after talk about who won and what was said and what was true and not. What I received and what I got out of the debate personally is this. If you look at the last 4 years, and you can decide yourself, are we better off as a country? Is unemployment truly lower than it was 4 years ago? Absolutely not. Is the debt and deficit substantially bigger than it was 4 years ago? Absolutely, by multiple numbers. I think ultimately we need to grow jobs in this economy, as I said before. And I hope every investor gets out there and really votes and really thinks about who they're going to vote for. Now, while you're not going to agree, and either do I, with everything that each candidate has to say, you have to look at the bulk of the issues and really decide who's going to be best overall for the U.S. economy and for the U.S. Not only taxpayer, but also for people who maybe don't pay a lot of taxes. So ultimately, the jobs are what's going to create revenues in this country. Not only for the individual, of course, but in tax revenue, which is going to help pay down our deficit. And if you don't create jobs, again, you're going to have a slow economy. With that, we're currently invested in emerging market debt or bonds. We're invested in gold. We are invested in emerging market securities, and we're currently invested in large cap within the S&P US. I feel that as we get through the rest of this year, I think we're going to continue to see some of this volatility. A lot of the earning numbers that have been coming out have actually been decent on a number of companies, and I believe as we continue to go through earnings season over the next 2 to 4 weeks that we will see some weakness, more so in technology, which used to be the bellwether, and I'll tell you why I don't think tech's the bellwether anymore. And I think you're going to see outperformance in other sectors, some in medical, some in the banking sector, and so on. My personal regards in the technology sector is this. Many of the especially large cap companies really don't have any new and exciting new technology that's really going to push the needle for them. So ultimately what I see across the board in most large tech companies is really slowing revenue and slowing earnings. And this is just a natural cause of mature businesses, and until they have actually something that's definitively excellent that can really drive a new strategy, most of these technology companies, in my opinion, companies like HP, Hewlett-Packard, companies like Intel, companies like Microsoft, are going to basically trade either lower or in this range and really haven't gone anywhere in 10 to 12 years, but down. And I feel you're going to see more of that in the same. Now, there's other parts of the technology arena that actually look promising. I've talked about Apple before. While we don't own Apple anymore, and I would not be a buyer of Apple currently, I feel Apple again is one of those companies that really has seen probably its best days in stock valuation. And the reason I say that is the big claim to fame for really Apple has been their iPhones and their tablets. And what happens when that success happens, other companies like Google, like Motorola will start coming out with quality products that are very good competitors to products from Apple. And we're starting to see that already. So as I've always said, buy and hold is not an investment strategy, and sometimes you need to sell and you need to make changes to that portfolio. We do that each and every day. We do it as necessary, following a detailed investment strategy. Sometimes what we do doesn't quite work out, but often over the long term what we do, our strategy works effectively well. I unfortunately believe there's too many investors today that are chasing yield and putting money in very high risk, fixed income oriented investments, things like a substantial amount of money in closed-end mutual funds, things like leveraged bond type investments that ultimately I feel are really going to be big risk in a retiree's portfolio. So for non-clients, I would heed this warning. Make sure you're not chasing the highest yield, because with that highest yield comes substantial risk. Sometimes you're better off to actually have a little bit less risk in that portfolio on the fixed income side, so you don't absorb a major downdraft in principal value. I believe right now one of the best opportunities for fixed income is the emerging market sector, and I'm glad to say for our clients we own a position in emerging market fixed income. I believe this will continue to be a leader for a couple of reasons. Number one, their interest rates are higher than the U.S. Number two, most of the emerging market economies are fiscally more responsible than most of the developed nations around the world. Number three, since their interest rates are higher, and if they do see a little bit of slowdown in their economy, they can reduce rates, which gives potential for capital appreciation in bonds. So ultimately, I think the total return of emerging market debt is going to outperform and out-trump over the next 1 to 5 years on most U.S. debt, especially high long-term duration government-type bonds. So those are areas that we are basically in currently. I would again tell investors out there, if you're not a client, I would watch your exposure into higher risk fixed income and long duration bonds or bond funds. This is the exact time you want to look at trimming risk. Remember, when people get complacent and they bid up yield, that's when the biggest risk comes. On today's TV show, I'm going to be talking specifically about taking too much risk with fixed income and why I think a lot of investors are chasing the highest yield and they're going to be sorely disappointed in months and years to come. This is Brian Resney. Of course, if you're a client, you have a question, give us a call at the office. If you're not a client and want to become a client, give our office a call for a consultation. We always like dealing and working with new people who are nice people who want to do business with us. Have a great and profitable week.